Page dig by Finanl. I'm going to present chapter 1, which is Introduction to Corporate Finance. Here is the chapter 1 slides. Before starting East Coast Edge Company's questions, here I'm going to talk about what is sole proprietorship. A sole proprietorship is a business which is owned by one. What are the advantages and disadvantages of changing the company organization from a sole proprietorship to an LLC, which is limited liability company? There are several benefits and drawbacks to changing a company's organizational structure from a single proprietorship to a limited liability company. Here are some crucial points to given below. Benefit of switching to a limited liabilities company. The first one is creditability. Conducting business as an LLC can enhance the company's creditability in the eyes of customers, partners, and suppliers because it implies a more formal and established corporate structure than a sole proprietorship. Second one is limited liability. One of the main benefits of establishing an LLC is that it provides its members with limited liability protection. The owner's personal assets aren't shielded from business liabilities in a sole proprietorship. Members' personal assets are protected under an LLC since they typically aren't individually liable for the debt and obligations for the business. Third one is flexibility and taxation. The taxation of limited liability companies is flexible. So by default, an LLC is a pass-through entity, meaning that profit and losses are distributed to the members. Individual tax returns as opposed to being taxed twice. An LLC may alternatively decide to be treated as a corporation if doing so is more advantageous from a tax planning perspective. The last advantage is freedom in ownership. Limited liabilities companies provide more freedom in ownership and management. You can choose to have one or more members with various ownership stakes, and company can decide whether the firm is managed by hired manager or members. Some disadvantages come with switching to a limited liability company. The first one is limited life depending on the estate. An LLC may only exist for a certain period. If this is the case, unless the operating agreement is specific otherwise, the limited liability company may need to be dissolved. Limitation on ownership. Some states may have limitation on who is allowed to own and manage an limited liability company. Additionally, if East Coast Edge organization is going to eventually go public, limited liability company might not be the greatest option. The third one is complicated corporation. Even though LLC are often less complicated than corporation, there are still more administrative duties such as producing annual reports and maintaining operating agreements. Some business owners like the straightforwardness of a sole proprietorship. The last disadvantage is cost because it is creating and maintaining an limited liability company that could be result in extra costs such as filing fees, yearly reports, and legal fees for currently forming it. This cost might be higher compared to sole proprietorship. The second Question is that what are the advantage and disadvantage of changing the company organization from a sole proprietorship to a corporation? There are several advantages and disadvantages of changing the company organization from a sole proprietorship to a corporation, but I am going to explain few here. The first one is limited liability, like an LLC, which is limited liability company. The company offers its shareholders limited liability protection because shareholders are frequently not held personally liable for the debt and legal obligation of the organization. Their personal assets are protected. The second one is separate legal entity. Since a corporation is legally separate from its owner, it could be easier to raise money by selling shares. Additionally, this division makes it possible for the company to carry on doing business even if stockholders change. The last one is taxation, which is compared to individual tax planning, corporate tax planning, which is more adaptable. They can choose to fill taxes as a example using example as C corporation or a S corporation. C corporations are subject to double taxation where shareholders pay taxes on dividend and the company pay taxes on its profit. So S corporations going to operate as pass-through entities just like limited liability companies. The drawbacks to switching to a corporation include compared to sole proprietors or limited liability companies, corporations are more complex and require more administrative oversight. To do this, the company must hold regular shareholders meeting and keep corporate records and adhere to numerous local, state and federal laws. Here are some drawbacks which I'm going to explain. The first one is cost, position and control, and regulatory compliance. Which is cost? Cost is compared to operating as a sole proprietorship or an LLC. Forming and sustaining a corporation might be more expensive. There are fees for incorporation, yearly filing fees, and possibly greater accounting and legal expense. Which is positions and control. Position and controls are shareholders in a corporation have control over how the company is run based on their ownership stake. The founder or original owner could lose control if they sell substantial ownership stakes to investors. The last one is regulatory compliance, which I already mentioned. Corporations are subject to more regulatory scrutiny and reporting requirements than single proprietorship or LLC. Breaking these rules may result in legal issues and the sensation. The last drawback is less privacy. Among other public disclosure requirements, corporations must produce financial statement and financial report. This might result in less privacy compared to a sole proprietorship or a limited liability company. To conclusion, making the decision to change from a sole proprietorship to a corporation should consider being business goal, financial consideration, and local tax and regulatory implication, which is essential that consult with legal and financial specialists so that owner can make the best decision possible given the unique circumstances that each cost each organization is experiencing. The last question is ultimately what action would I recommend the company undertake and why? I recommend because I should consider forming an LLC first. It is advised. This scheme is more straightforward and offers limited liability protection than a corporation. It also offers tax flexibility and capacity for growth. A corporation down the road if the scenario calls for it due to significant growth or investment opportunities. In addition, to safeguarding private assets, this allows the firm a greater deal of freedom. After consultation with legal and tax professionals too, who can provide specialist advice considering the specific circumstances, goals, and South Carolina regulatory environment of the company. The suggestion should be made. The decision should be made in accordance with the organization's long-term objectives and capacity. Why I recommend the company undertake? If protection the owners, Larissa and other stakeholders' personal asset is the primary concern, both an limited liability company and corporation give limited liability protection. And thank you. This is all about my presentation.